Well, hello again, traders, and welcome out. This is Untitled from Maverick Currencies here, and welcome to your weekly currency room on September the 24th. Reflecting on this week and preparing ourselves for our upcoming week of September 25th to 30th. So let's to get onto it, take a look at the markets. It was a pretty big week, so let's just get onto it and start to break down the price action. And always make sure you're following your trading plan. So last week was a big week. Again, S&P is now down more than 10% in 2 weeks. So we are seeing this continued weakness across the board, and as the market stays weak, the dollar is catching the bid, and dollar again remaining strong as well. And also the yields, if you pay attention to the 2-year yields, I mean, they're all rising quite aggressively. So we are not seeing any sort of relief coming into the markets. This week was a big week when it comes to news events, and we have the FOMC statement on Wednesday. And as expected, they raised rates by 75 basis points, but the focus is not on the price hike that took place, but it's also about what their future outlook is. So the Fed remains very hawkish. It seems like the Fed was behind the curve last year, and now they don't want to be making mistakes. And even though a lot of the commodity prices, a lot of the things have cooled off, we are continuing to see the Fed staying aggressive. So don't fight the Fed is really the takeaway from this, and staying in course with this expectation. So as the dollar stays strong, it really puts pressure on every other asset class or other major currencies as well. So outside of the FOMC, we had the Swiss bank. Now we had seen the raise rates by 75 basis points. And interestingly, we saw the Swiss bank, the Swiss franc actually did sell off on that news. So again, it seems like this is a global money tightening process that's taking place. And interestingly, it's all central banks pretty much acting around the same time. So right now, this is really hurting the markets. And as long as the market stays weak, I think we'll probably see a continuation of what we've seen so far. We have an interesting event last week, which was the Bank of Japan intervention, which really came on Thursday early morning. So it was interesting. They did not make any change to their monetary policy. So the dollar yen just continued to spike higher. So yen was continuing to weaken. And overnight, at about, I think, 3 a.m. Eastern Standard Time, we saw the intervention that happened. So we talked about the intervention a week prior. So it was not a surprise when they conducted the rate check. That's usually an indication that they could act in the markets, and that's exactly what happened. So very nice move in some yen crosses this week. And something will be big focus in going to next week as well. We also have Bank of England that raised rates as well, but oh boy, the British pound just continued getting hammered here. It's down quite aggressively, and the biggest we have seen since 2020 and 2016 when we saw the UK. When we saw the Brexit. So big moves taking place. And outside of those central bank events, we had the Canadian CPI, which was interestingly weak. So this was a bit of a bearish catalyst for the CAD. But later on, as the market sentiment stayed weak, the CAD really got a bit towards the end of the week. But I think CAD is something to pay attention to next week as well, especially if dollar backs off. I think the CAD has a bigger chance to back off as well, because the inflationary pressure is getting a little less, which again, we have to pay attention to Bank of Canada and see if they are making sort of changes to the statement, or are they staying as aggressive as the Fed is. So remember, right now, it's the inflation and it's the central banks that are really driving these moves. But outside of that, I mean, the PMIs, the US PMIs were not as bad. So the economic events are not as bad, but this movement is just driven by the central banks. So let's do a quick last week's review and take a look at the percentage changes, see what's really been moving and where we need to focus on in the next coming week. So the equity markets are now testing June lows, which again has been something we've been discussing, that this was the next target, and we actually now hitting that level. On Friday, we did break below, and then it actually caught some bid, and actually we closed up a little bit higher. So I think at this point, at this level, we could see either one or the other. We could see some bearish sort of base happening here, or we could start to see a little bear rally. Notice the difference between the 20 to 50-day moving average. I mean, we are seeing a 10% move in just the last 2 weeks. Since the US CPI surprise that came out on September the 12th and 13th, after that, you can see this destruction has taken place in that 2 weeks. So whenever market looks extended like that and there's extreme readings, there's could be a chance for some sort of bear rallies. And again, those bear rallies are just a part of the process. You can see when we had a big drop in June, we had a nice little bear rally. So the bear rallies can come in, and I think next week that's what we're really expecting for as well. But with the percentage change, you can see that we have the World Stock Index down for 5.6%. I mean, cryptos were kind of off where they actually were a little bit stronger. But outside of that, everything got hit. Gold is down 1.85%. I mean, look at that, oil down 7%. So a lot of these inflationary pressures are really getting hammered down. Again, this is all part of the Fed's efforts to really tame the inflation. They have to try to cut that demand, and that's really going to hurt markets across the board. So big week percentage-wise across the board. Let's take a look at currencies and how currency moved. And oh boy, I mean, look at the percentage change. I mean, we rarely get weeks like this where not just a one currency, but we have currencies that has more than a 2 or 3% percentage change on a currency basket across the board. I mean, we have 4 currencies that were up above 2% mark. We had the yen, we had the dollar, we had the pound, and we had the Kiwi. I mean, massive moves. And if you really pair these moves up, I mean, Kiwi dollar and Kiwi yen versus pound dollar and pound yen, I mean, massive moves that could be in those pairs. So getting some extreme readings here, but outside of that, we had Swiss franc, euro, CAD, and Aussie are kind of not the big player here. So this is, again, a good takeaway that focus on currencies that are actually moving versus the currencies that are not. And there's some relative strength in certain currencies. Even Aussie, I'm kind of surprised with that negative correlation here. I mean, look at that. It's almost a 1.6% negative correlation, which means if you were actually long the Aussie Kiwi, which again, those two currency pairs don't really move as much because they're mostly positively correlated. But I mean, look at that negative correlation. Same thing with the euro Swiss franc. Euro is down and Swiss franc is up, and that's another 1.5% moves. So across the board, lots of movements to kind of go through. And this is, again, a great market for traders because we can make money on both sides. I mean, early part of the week, yen was really weak, and the second part of the week, yen was really strong. So which creates opportunities as a trader. And as a trader, we just have to make sure we are flexible with our outlook and we're not just married to an outlook. Now, cryptocurrencies, we'll quickly glance over. Again, the main cryptos that we pay attention to, Bitcoin and Ethereum. They were not really the big mover, but outside of that, we had the Bitcoin Cash or Solana. So at this point, I'm very uninterested in cryptocurrency. I think the currency markets actually are a better place to be. So let's do a quick market analysis and let's take a look at what's really moving. So our outlooks remains weak at a -2. We are below the 20 to 50-day moving average. So at this point, markets again looks extended to me, and they do look oversold. So expecting a little bit bounce here. And I think the big important thing to pay attention here is, does this level hold? If this level holds, then we could be in for this little range bar price action. If this level breaks, I think we can see a little bit more panic setting into the market. So historically speaking, September is the worst month. We're almost towards the end of September. Let's see how this will shift into October. Do we get any sort of panic, or do we just kind of flatten out over here? So that's something we'll be paying attention to this upcoming week. But outside of that, we're seeing World Stock Index again breaking lower, breaking key support. And then in the crypto world, I mean, the chart looks messy, but overall, we know the direction is pretty much weak. So if you're trying to understand where the big move is happening, the big move is definitely happening on the shorter side. But in between, we do get these powerful moves that we have to make, adjustments to. I mean, you can see we're early or the September. I mean, that looks pretty weak. The last week of August, but then there's a massive rally here. So what can really change these markets? I think we really need to pay attention to is the inflation numbers coming ahead. So next in October, we're gonna have the U.S. CPI come out again. I mean, that will be the one that will be a catalyst for markets to kind of bottom out, because that's where it will indicate that the market actually could be just getting ahead of itself, and maybe we need to take a little bit break in this selling here. So next week, not a busy week in terms of news events. After a big week like this, we have next week just the Canadian GDP, which is on a Thursday, and we have the RBNZ governor speaking, and we have I think the PC index on a Friday would be a little important. We have the Fed Chair Powell that's speaking on a Tuesday and a Wednesday. Maybe the Fed Chair Powell would kind of come in and try to calm the markets down. So I think we could see some sort of relief rally early next week as well. So as far as our outlook goes, we are thinking markets sentiment again remains bearish, but expecting bear rallies in between. And when those rallies happen, is either better steer clear or trying to play those bear rallies. So depending on what your trading plan is, you can actually have one or the other. But after big moves like this, I think it's important to be expecting some sort of bear rallies in between. So in the cryptocurrency world, let's glance some charts here. Again, the velocity was not a big mover. It was a 0, but I think overall the trend again remains weak. So this is the same thing across the board. Nothing to paint a pretty picture here. So everything looks weak. Now, let's focus on currencies because that's really where the bigger movement is. So the dollar, I mean, look at the dollar continue to rise. So dollar really has two things going for it. We have the very aggressive Fed chair, and we also have this risk sentiment that's turning very bearish. So the dollar is really acting as a safe haven currency. So look at the big candle that we had on September the 12th and 13th. And we had another big candle here. So usually after this big candlesticks, you get some consolidation or pullbacks. And you can see that last time after hitting that level, we had a consolidation. So I think the next week we could see some dollar consolidation. The velocity is really strong here. So maybe look for some sort of topping price action. But right now we're closing at the highs. So maybe early next week, we'll see the dollar maybe start to attempt to maybe have a bit of a last push higher than pulling back a little bit. But remember, trend score is very strong. And these are the times where if you're just following the trend score, then you can just stay away from, being long at this point. But doesn't mean you have to play on the bearish side. We can just see the market, see what it does. But one thing to kind of pay attention in all these charts is that when you are so extended, it's too late to really get long here. I mean, if you kind of miss the move, at this point, it's very difficult to get long because the risk to reward looks so poor. You can see any reversals at any time, but even a small little pullback, could be a lot big of a percentage change to the downside. So we had to really pay attention to the dollar. I think as long as the market stays weak, the dollar will catch a bid. If the market takes a breather, we can see the dollar backs off. Now, the yen is another big focus for me next week as well, because again, we're playing that relative strength and weakness. So far, one thing I do like about the yen is that it's staying, holding this level. So we got the intervention, and then after that, we're just seeing consolidation. If this consolidation breaks out, I do like yen to the upside. And for the first time since late July, we are above the 20 to 50-day moving average. So how effective these interventions are, or what are the chances for another rate hike or some other interventions to come in? I think we can see renewed risk for another intervention, especially if the yen start to fade that move. So I think I like your yen more to the upside than to the downside here, just based on that. Now, Swiss franc is the one that was interesting for me because on going into the rate hike, we saw the Swiss franc was really running. We saw a massive pullback here, and after that, we're seeing a bit of a rally, and we kind of really at the midpoint here. So I think next week, if you take a look at the high and the low of the candle, if it breaks higher, we can see the Swiss franc resumption. The trend kind of resumes. But if this start to fade away, I think I would like to maybe play the Swiss franc to the downside. So I'll be paying attention to Swiss franc early next week and see which way it goes. Now, euro was looking much better, but at this point, you can see it's now catching some support at 20 and 50. So as long as it stays above this, I think I would like to play euro more to the upside. But if this gets below these two moving averages, then we can move the trend score down, and we'll actually start to play on the downside here. But notice that euro is actually holding it a lot better compared to some other currencies, especially its counterpart, the British pound. You can see how much it was weak, and we got a big candle here. So at this point, I mean, the trend and the velocity score sitting at a -3. Very difficult or not advisable at this point to get short here. I think the big moves already happened, a big flush down taking place. At this point, we could see some sort of bear rallies or some sort of reversal. So as a trader, you always need to understand at what point are you entering. And I think at this point, this is the exhaustion phase. And I think this is where I wouldn't really want to get short the pound here. don't really want to get long the pound here either. I think it's a risky play here, but that's what we can expect after a big move like this. There are other currencies that are kind of in the mixed bag here, like the CAD at a 0. I mean, I like CAD more to the downside after a weaker CPI print, and you can see really it stayed weak till it really propped up a little bit on Friday. So I think the CAD remains a little bit of a mixed bag. I mean, still moving along with the dollar. I think we just have to, set some reasonable expectations here, not really looking at CAD on any aggressive upside or to the downside. Now, looking at other charts, I mean, look at Aussie here. I'm so surprised that Aussie's holding it so much better compared to the Kiwi. This thing is staying sideways in this little range. I mean, velocity score was weaker, but the trend is not that weak. Just want to identify that the trend score is not that weak. Could it get weaker? Absolutely, it could. And I think that's where you have to kind of watch out for these other levels. If these levels start to break, then we can increase our intensity on the Aussie. But I think meanwhile, you can just take away from what we saw back in Kiwi. Kiwi was actually sitting sideways until it broke that support, and then it really got aggressive. So I think Aussie kind of looks very similar. But at this point, if the Kiwi remains the weakest one, it's hard to really sell the Aussie as aggressively. And I think this is where you just have to respect that relative trend of weakness. I'm not really trying to make too much sense of why this is happening or that's happening. Just go with the flow. I think that's the takeaway here. As far as the trend score goes, I mean, a lot of across the board. We have the dollar sitting at a +3, yen and Swiss franc at a +2. And we have on the negative side, we have the Kiwi, pound, and the Aussie. So we got three currencies on the left, 3 currencies on the right, and we have the euro and the CAD kind of in the middle here. So as we go into next week, I mean, as we are sitting at these extreme levels, I think trend scores are not going to change as much, but where we can see a change is in the velocity. In the velocity, you can see that there's similar kind of picture across the board, but in velocity we can see things move, where we can see the dollar backs off a little bit, or the CAD backs off a little bit, and then the Aussie or the Kiwi and the pound trying to rise a little bit. So we've seen these kind of movements in the past, so not be surprised, when you see that with these extensions, the risk goes higher for some sort of rallies. And I think those rallies are healthy as well. It gives you more opportunity to get back in at a later date. But when that happens, just remember that we could have a very negative or positive trend score, and we can get an opposite of that price action. So that's where we are. I think don't want to be married to this outlook. This is where the relative strength and weakness is. But also realize that entering dollar here or entering pound here is also very risky. So we could see maybe yen, I like it a little bit better. It's just Franc. I'm kind of mixed bag here. So Kiwi looks very weak. So I think at this point, either we take this week off as a consolidation week or a bear rally week. But again, if you are trying to play those reversals or any sort of rallies, again, that could be a viable strategy. It's all about how you trade and what your trading plan is. So let's get into into the charting here and take a look at what's really that looks good on technical basis here. So let's just start with the dollar yen, because I had a lot of question of dollar yen after the intervention. So you can see that the dollar yen really reversed off that 145 to 146 area. So this is the first thing you need to really pay attention to. This is a very important level of resistance. So we have rejected this level 3 times. This time with a reversal here after the intervention. So as we go into next week, and we are actually getting very closer to this level, I think we just have to watch out for this. I don't really like the dollar yen more to the upside because of that intervention risk. But I mean, at this point, nice rally taking place that we can maybe look into later for shorting. I mean, that will really depending on if the yen can actually curve around and go higher. We covered this in our Bank of Japan Outlook video. I mean, a lot of times these interventions don't really have a big impact later on. But again, if there is more interventions, more action from the Bank of Japan, I think that will be pretty clear, or it will keep the traders away from shorting the yen. So the dollar yen is the one that I'm paying attention to. But if you take a look at all the other yen crosses, we have the Swiss franc yen. I mean, we reversed very nicely, having a bear rally here. I would love to see if these bear rallies kind of give away. So outside of that, we have all these yen crosses that are actually move lower. They're below the 20 to 50. So something we really haven't seen for a long time. So I think yen crosses look interesting to me here. But again, it's all about risk to reward. It's all about where the momentum is. I think there's decent opportunities there. We have also seen other currencies that have run up really aggressively in a very short period of time, like dollar CAD. It was sitting at 130 just 2 weeks ago and sitting at 136 now. That's a 600 pip move in a very short period of time. And if you take a look at some of the changes here, I mean, we're seeing the biggest change of the rise that are taking place in a lot of these currency pairs. So whenever you get this extension, we are quite far from the 20 to 50 moving average. I mean, we could see some sort of reversals come in and play as well. And again, those could be just a bull pullback. But these bull pullbacks could be tough to sit through because that 100 pip move here and there is pretty substantial. And as you try to get a nice risk to reward ratio on these charts, sometimes it's difficult because you're taking a little bit more risk, but the risk to reward ratio does not look that good. So maybe reversals looks better here, but at this point you can see where we ended up on a Friday, it doesn't give us any indication. I mean, euro dollar sitting at 96.86. I mean, pound dollar, below 90.85 lows. I mean, there are certain currencies that I haven't personally seen these kind of levels. So whenever you get these extreme readings, I mean, take a look at the pound dollar. This was the biggest weekly drop, I would say, right here. This was the biggest weekly drop since 2020. And then you go back and you say 2016. So if you look at the surfing analogy, I mean, this is where the tide is really high. So it's better to steer clear from this rise in tide. And when that things kind of calm down a little bit, I think that's where it's better to kind of pound and act. So if I take a look at these charts, I mean, they all look good, but they look extended to me. So I'm not really wanting to get long, getting on those currencies at this point. But at this point, I'm not really as aggressive wanting to jump on the bearishness or on the opposite trend either. I think this is a better point to wait and see what happens and then kind of go from there. I think that's a game plan here. So let's talk about our conclusion here. Again, market likely to bounce or base around that June support that we did hold on Friday. So next week, looking for basing, looking for some sort of bear rallies. Not sure how strong those bear rallies would be, but I think as the prices look so extended, I think we could see some of little snapback moves. But again, focus on relative strength weakness. We have lots of more ton of content coming next week, so pay attention. Again, last week of September, this has been a great trading month. Not looking to be as active next week. And then after that, starting October, we'll be looking back into more active trading as we start to get more news catalysts. So pay attention to the markets and steer clear from things that carries too much risk, and just always not only just pay attention to the technical setups, but also pay attention to the risk to reward ratio. Now, is it worth taking that risk? And usually whenever you see these extended moves, you can do everything right on paper, but still, have a losing trade because, you just, in the shorter term, the tide is really shifting a little bit. So that's the game plan. Enjoy your rest of the weekend, and we'll be back next week. And if you have any questions, just reach out. Take care. Bye.